Welcome to the Land to Lots podcast, powered by Launch Development Finance Advisors. And now your host, Carter Froelich.
Hello, everybody, and welcome to the Land to Lots podcast. My name is Carter Froelich, and it's great to be before you again here today. Today, I have the distinct pleasure of welcoming to the mic John Burns of John Burns Real Estate Consulting. John is the founder and chief executive officer of John Burns Consulting. John, thanks for taking the time to discuss with our audience trends that are impacting the land and home building industry.
My pleasure. And we definitely don't need to re-record this, but we just renamed the company John Burns Research and Consulting a few years ago. So just a little correction on the intro there.
So I'm just going to call it John Burns, and I'll call you John. How does that sound?
Okay, that works great. So,
and for those of our audience that don't know John Burns and or John, you got to get out more, because there isn't a day that goes by that we're not either interacting with John and his consultants around the country or receiving some of their market intel. And I know that we at Launch and Land Advisors subscribe to all of the great data that you provide us. And obviously, we're a huge consumer of your market studies, anywhere from California to the Carolinas, where we're issuing bonds. And I swear there's not a day that goes by where we're not on the phone, talking with Brian or some of your other consultants in Texas as it relates to the issuance of the launch bonds. Which have really changed how we finance infrastructure in Texas.
Yeah, well, congrats on your entrepreneurial endeavors there. You made a big difference to the industry. We appreciate it.
Thanks, John. And let's start there. Okay. So why don't you give our listeners a little bit of background of yourself and how you started your firm?
I started it right after 9/11, which one of my mentors, the older guy, Al Gobart, told me was the exact worst time to start a consulting firm. But I'd always wanted to be an entrepreneur. I tried something when I was in grad school. It was an expensive lesson. And then after 9/11, the company I was working for, I'll just say, blew up. And my wife said, I support you. We had two little ones, and I went off to the races. And I know you have a background at KL, so you have a similar background to me, or Kenneth Leventhal, which is now part of Ernst & Young, for people that are a lot younger than both of us. But the commercial real estate industry was really sophisticated on understanding what was going on in the market. And I felt at the time the residential developers in particular were not.
Yeah.
I saw the opportunity to bring some of that commercial real estate thinking and data collection and analysis to the home building and land development industry, and that's what got us started.
Well, and I'm dating myself a little bit, but when we were doing some of these market research studies at KL, I mean, we were in the field literally shopping all of the builders, going through microfiche. I mean, for those of you that don't know what microfiche is, please Google it. But it was not, the way we do it today. And I want to talk to you a little bit about that. But when you started your firm, what was the biggest challenge you ran into, as putting out the your placard and starting to provide services to the industry?
Paying the bills.
Yeah.
I had two little ones.
Yep.
And I wanted to start a big research business, but the consulting was paying the bills. So I was doing research on the weekends and consulting during the day, and worked really hard. And my wife supported me every single second of the way, all the way till today. So she won't take any credit, but I try to give a lot of it to her.
Yeah, absolutely. No, it takes a lot of support and a lot of hours to get a company off the ground. I mean, people just don't realize how much time and effort it takes.
Well, and staying profitable. I mean, I made all 20, I don't mind saying I made all 25 grand the first year. So, that'll keep you working hard, because you need to do better than that.
And I remember when my partners and I left KL and we started my previous entity, and I moved over to from California to Arizona, and was trying to teach everybody how to spell CFD, let alone, try to explain how it worked. And I just said, if I make $2,000 this month, I'm good. I pay all the bills. Right. And that'll get you up early in the morning.
Right.
Yeah. So over the years, I mean, things have changed dramatically. What have been the biggest changes I alluded to a little bit of having to physically go out and shop, the various subdivisions and builders and product types. what has been the biggest change you've seen so far in the industry, and what are you thinking the biggest changes will be moving forward?
Well, when I started the business, there was just data wasn't readily
Yeah,
available. And there was like the employment growth to building permit ratio was the demand supply indicator, and that was it. And then over the course of so I would go get that data and I'd figure it out and we'd help advise our clients. And then over the years, it's become there's just too much data to
yeah,
analyze. And so, our little 4-page reports are now 80 pages of
yeah,
data, which nobody reads
yeah.
except we do to get to the answer. And I think with what's going on with AI now, that's going to change the game substantially. So that's going to be a fun next few years to see how the industry changes again.
Yeah. Any predictions on how AI will change the industry or how it's making your sifting through all of that data much easier and to be able to evaluate it?
Yeah, so I spend a lot of time on this. Uh, I would equate AI today, and we're recording this in February 2025.
Hmm.
It's in the last 6 months, it's gone from like a high school level intern to like a recent college graduate intern who's way smarter and way faster than any of us. And I say intern because they're just making a lot of errors
Yeah.
or that there's not a lot of confidence in them. And they only know what's available on the internet. So having proprietary data, having the ability to stay one step ahead is where we're headed.
Yeah.
Um, and it is making us more efficient, but it's going to make us crazy more efficient. But we're going to turn that into doing even better analysis because all of our clients are going to have access to the same thing and they're going to need a
Mhm.
competitive
Yeah.
advantage, and we want to be the competitive advantage.
Yeah. Well, and you touched on, demographics, and obviously that determines the direction of real estate. What are you seeing? And I know demographics are different for different parts of the country, but as a whole, what are you seeing as it relates to demographic changes in the US?
So there's the answer to that question for me used to be so messy that we ended up writing a book about it called Big Shifts Ahead 8 years ago to clarify things. Um, and there's really two elements to it. There's elements that are predictable and unpredictable. So
Mhm.
I know with a pretty high likelihood I'm going to be a year older next year. So and usually things like the birth rate and stuff you can be off a little bit, but you kind of know. So demographics is the future, but we coined this term called the 4-5-6 rule, which is there's four buckets of things, and I think this really helps people understand. It helped me understand how to adapt your strategy for demographics. There's government changes, which with the new administration, we're getting a lot of those.
Yeah.
And
How
it, but
many have we had today? Sorry.
oh, I can't. Well, it's 7 days a week now.
Yeah, just
Um,
kidding. Sorry to interrupt.
but if you look in they established a Fannie Mae. What did that do to the industry? The
Mhm.
GI Bill, Dodd-Frank. I mean, there's some big things. The economy is the second one, and we've always been paying attention to that. But the economy is unpredictable. The third is technology, and we already were talking about AI, but it comes in all sorts of things.
Mhm.
Like the birth control pill changed
Yeah.
demographics dramatically.
Mhm.
I think everything I'm reading in AI is the advancements in medicine are going to be unbelievable, and there's a good chance we could all be living a lot longer than the
Yeah.
actuaries are saying too. And then the fourth would be societal shifts, which are really hard to predict. And I mentioned the birth rate. I mean, the birth women are having a lot fewer children,
Mhm. Yeah.
and so those are the types of trends that we pay attention to, and then hopefully we help our clients get ahead of.
Yeah. And given the fact that our and these are questions I don't know the answer, so I'm going to ask you, John. Are we replacing with new births or deaths currently in the US, or are we having to rely more on immigration
Yeah.
to keep our population growing?
No, I know a lot about that. That was the book. So we went from decades of roughly 4 million people per year graduating from high school or college and entering the workforce, and 2 million people per year passing away,
Mhm.
to now we're closer to 4.2 entering and 4.0 passing away. So
Okay.
it's the baby boomers passing away, that is making the household formation and housing demand that's generated domestically a lot lower. That was perfectly predictable in our book. It's
Right.
playing out exactly like everybody thought. Immigration has been a very hot topic lately, but usually it's been a steady Eddie number of a million two or so that come into the country every year. So much of the conversation is around whether or not we let them in, but there's a demand element to this about what's going on in the rest of the world that drives people to come here.
Yeah.
So the last 3 years, we saw so much more immigration than usual. We created 700,000 more households in 3 years than normal.
Wow.
And that was not predictable.
Yeah.
And people think it's the president of the United States policies, and those matter. But really, it was wars in Ukraine and Russia that caused people to get here. It was stuff going on in Venezuela. There was Cubans being able to get out of Nicaragua. There was a 2023 shutdown in China that people wanted out. There were a
Yeah.
lot of things going around the world that just made people want to come to the best country in the world.
Right. 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 And which leads to the next topic, and there's a lot of questions I would like to ask just on some of the demographic issues, but let's talk a little bit about affordability. So we have our demographic. Well, we're still keeping slightly ahead of our deaths with
Right,
our new arrivals being new births or immigration. But given the low land supplies, lot supplies that we're seeing, some places more severe than others, California being one,
right.
higher land prices, material costs, higher interest rates, affordability has just been, you know, really impacted. It's very difficult for people to buy homes, at least new people to buy homes. Is there a silver bullet to this that you're seeing, or is it just publics buying down mortgages, greater density? What is your and your firm's position on this, or if I can say that as a general question, and then more specifically in the different regions?
Well, some things may change here, but I mean, entry level buyers have been complaining about affordability since I was 21 years old. So this
Yeah.
has been going on for a very long time.
Yep.
And we learned that people figure it out. I mean, if you want to be a homeowner, you figure it out.
Yep.
If you either move somewhere, you accept a smaller place. Uh, I'm still optimistic that what has always happened is that by the age of 60, 80% of 60-year-olds are homeowners.
Mhm.
So that's going back for a very long time. And how quickly people get there depends on affordability and other things. But I still think that's going to happen. And there's nothing in our research that's saying people don't want to,
Yeah.
want to rent for the rest of their life. So I don't believe that at all. I think this work from home shift, which is enabled by technology. I mean, you and I are doing this
Yep.
in different locations and on Zoom, and we all have high-speed internet. That did not exist 15 years ago. And that is a solution.
Mhm.
So people can live further from work and come in 3 days a week. I've had a lot of my California employees relocate to other states, and they're living large and still doing a great job. In fact, I probably have a higher retention ratio because of it, because they're so thankful. We just had to learn to
Yeah.
work
Right.
differently.
Right.
And so I'm optimistic people are gonna figure it out. And one last thing that I've always been curious about, if you look at affordability around the rest of the world, the countries that are a lot older than ours,
Mhm.
they're worse than us.
Yeah.
So you do get more for your money in America than in Europe and in the Asian cities and some of these other places. And so I wonder if we're becoming permanently more expensive, basically just like they are, because our great places to live are getting built out.
Yeah. And I remember my first mortgage that I had was above 15%.
Yeah.
And and when it finally got down to 6.5, I thought it was proof to me that there was a God. Yeah, and that's kind of sort of where we're at right now. And what is the average mortgage rate that has been experienced over last 50 years? Is that anything that you?
It's today's mortgage rate.
Yeah, it is.
It's
Exactly.
it's 7%.
So we're at the norm. for the last 50 years.
We're at the 50-year norm.
Yep.
That's exactly, but what is not normal, Carter, is how much home price appreciation we had
Yeah.
when rates were low. So we do not have a normal affordability in this country because of the home price appreciation that occurred.
So with the demographic changes we've talked about, and I know a lot of people my age, and I'm 64, and that are starting to pay attention to this, to the topic of longevity. They're going they're getting stem cells and all sorts of things that I'm not qualified to speak about. But to your point, I think that we truly will start to see people living longer over time, as we already have. And will that impact, in your opinion? Yeah, a lot of people are going to stay in place. They won't necessarily be selling. Maybe they will. Will that change the way builders are looking at where they're building, how they're building, what type of units they're constructing?
Well, empty nester housing and active adult housing are a continually growing percentage of builder portfolios, I will say, for the most part.
Mm-hmm.
It seems builders seem to be picking a niche these days, and some of the bigger ones have kind of gone to the entry level because the
Yeah,
land is in an outlying area, and you and I are not going to move to an outlying area generally.
yeah,
So the home builders have migrated towards outlying areas and entry level, but the demand for housing is much older. In fact, I know this stat. The average first time buyer last year was 38 years old,
wow,
and the average repeat buyer, so somebody who was selling their home and getting another one, was 61.
wow,
Those numbers were up dramatically. So
yeah,
that's out there home buying. So if you're going to target the home buyers, you're targeting first time buyers, you're targeting a 38-year-old.
yeah, interesting. You'd mentioned the new administration. It's a new year. To your point, there's not a day that goes by where we don't get seven new things, shiny objects
Right.
to think about. But the biggest ones impacting our industry, at least speaking for myself, is we see the threatening or the levying of tariffs on Canada, Mexico, China. We see roundups of illegal immigrants, a lot of those individuals who are coming to this country to work. A lot of them are in the home building industry. Uh, what are your projections and predictions moving into the year? What we're going to see?
Well, it looks pretty clear the labor is already getting tighter for some of the
Hmm.
reasons you just said. So I would not be planning on us building many more homes this year if we don't have the labor. So
Yeah,
that's been a really tough message to deliver, particularly to some of our building products clients, uh, who are really, I wouldn't say struggling is the right term. Their balance sheets are phenomenal, but they want to
yeah.
grow their businesses, and the industry is just not growing for them.
So what do you think cycle times are going to increase to, if you were to guess?
Um, That's a tough because we're still improving cycle times after the delays from COVID.
Okay.
I think the issue is more just the number of homes.
Hmm.
So I think we're getting more efficient on cycle times, but I don't think we're going to be able to start as many homes. And I do think the cost of the homes is going to go up because of the if there are tariffs, that's going to cause the materials to go up,
Yeah.
and with this labor shortage, that will likely cause the builders to have to pay more for labor.
Yeah. And I don't see the crystal ball on behind you, but I know you have it probably on your desk. If you were to venture a guess, is there anything you would care to estimate in terms of what that might do to a home price? New home?
Um, Well, they will try to pass on the increases, but the ultimate regulator of price is the resale market. It's
Right.
still 85% of the home prices that transact. So yeah, if costs go up 10%, they'll try to raise it, but if you can get a better deal on the resale market, they're not going to get away with it. So
Yeah.
I'm not sure how much it's going to impact prices, Carter. It would
Yeah.
definitely impact margins.
So yeah, then it's going to hit gross and net margins. That's where it's going to
What
potentially show up.
Well, yes, and what is playing out here is economies of scale. I mean, you can see
Yeah.
it in the public builder financials, where some of the big ones have now got their SG&A below
Yeah.
5% on a regular basis, small builders just going to have a tough time keeping up
Yeah.
with that. And so I think we're going to continue to see the big get bigger.
Yeah, and that kind of great segue into the next. The big keep on getting bigger, and it's understandable. I think for most people, why the big publics with the war chests that they have are acquiring greater. Well, we'll get into land positions, but they're continuing to grow. They're buying smaller builders. They're expanding their market share. But there's also a lot of subsidiaries and of foreign companies that are also participating in the market, such as Sakasui House and Sumitomo and the Japanese conglomerates. What's going on with them, and why the appetite for Japanese conglomerates to come into the United States and start getting involved in the home building industry?
Well, the Japanese culture is historically much longer looking and longer thinking than the American kind of day by day and quarterly culture. And these companies are all more than a century old, I
Yeah,
think. And how could you grow a business in Japan today as a home building business? You
yeah, you
can't.
couldn't. Yeah,
Right. So you look to where growth is going on around the rest of the world. And even though our growth is not what it used to be, hey, America's still a great place to do business. You know, the laws are
mhm,
what they are. It's pretty predictable. You know, they're coming here with some lower cost financing, and I've seen that story play out before in the late 80s, and it
yeah,
didn't last. So
yeah,
I don't have the inside on that one. But their competitive advantages, they're coming in and they're saying, you know what? Hey, we don't have any presence in your market. We want to
yeah,
buy you. We will pay a premium for your brand and your people over somebody local who would just be buying you for the lots.
yeah,
And we'll cut a deal. We're not even going to take 100% of your company. We'll take 75%, and you can keep the other 25% so we're aligned. And we're just going to give you
yeah,
low cost capital. Yeah. And they don't get enough attention in America because their stocks are not publicly traded
yeah,
here, and they do a lot of other things in their parent company in Japan too. So they're not pure play home builders necessarily.
yeah. And just to your point, that a lot of the reasons that some of the builders are selling are exactly some of the competitive advantages that these subsidiaries have over the publics that are looking at it quarter by quarter, land light. I'm a manufacturer, and we're going to get into the capital markets in just a minute, but it's that very long-term look and horizon and low cost of capital. That's very attractive.
Right.
So great. Well, capital markets. So how are you seeing capital markets evolve? We touched on it a little bit, but what are you seeing in the trenches, John?
Let's take the public companies.
Okay.
So I've been following the public companies for a long time, and this is not a comment on the companies, it's a comment on shareholders, the
Yeah.
people who trade stocks. Is that the metric of the du jour or of the year kind of changes. It used to be gross margin, or it used to be that. Now it's return on equity or return on invested capital, and it's been that way for a few years. And so the companies have become less focused on, hey, what's my margin?
Hmm.
And more like, well, if I can structure my balance sheet with some off balance sheet financing, not just to de-risk, which is what it used to be, but to deploy less equity, basically my investment dollars are down and my returns are down a little bit too because I'm paying a land banker, but net, the return on equity is higher. You've seen these companies, and this is what NVR has been doing forever,
Yeah.
who's been the darling of Wall Street for years. That has been a big shift in the industry. And the companies now have got so much cash and so little debt thanks to this
Mhm.
that they're
Yeah.
they're investment grade companies that they would get through the if we had another great financial crisis, I mean, they'd get through it no problem.
Yeah.
And so that's a big change. And then yeah, that's probably the most interesting. So land banking has just completely exploded.
Right. And recently Lennar spun off all of its land assets to Millrose,
Yeah.
a publicly traded REIT. And so do you, let me just back up. As the builders continue to look for the asset light, land light model, do you see other publics following Lennar's path and to some degree Horton with Four Star?
Well, that's different. That's really land development expertise, which that's a
Yeah.
completely different. So home building and land development are very different.
Yep.
Land banking is very different too.
Yep.
The most land bankers are backed by high yield debt funds that just want, hey, I want some 10, 11% coupon. I'm willing to take a little more risk. This seems like a great risk return. That's the
Hmm.
dollar involved. I don't think any other builders would emulate what Lennar did, but I think
Hmm.
I do know Mill. I mean, Darren Richmond, the CEO, has spoken at our conferences before. He's
Yeah.
been a client of Kennedy Lewis for a long time. Um, there's now all sorts of different land banking opportunities for the home builders that they can pick and choose their land banker based on price, based on risk reward, based on relationship. It's that's been the big change.
What is the typical yield that the land bankers would like to achieve? 12 and a half, 15 in that range, or am I
Uh,
off?
yeah, I think that's old. I think they're more in the 11
Okay, they're coming
range
down.
now.
Yeah.
But I'm saying that they're not all the same.
Yeah.
Just like every land deal is not the same. So if you wanted me to finance the best located, lowest priced community, I would take less than that.
Yeah,
But if
exactly.
you want me to do something that may last for 4 or 5 years and in an outlying area that if the market turns, I'm going to be ending up owning that for 15, 20 years, that would have a higher
Yeah.
return associated with it.
Yep.
Most of these guys, I would say the yield is probably less than 11 to the builder. It is less than 11 to the
Yeah.
builder, but then they're getting some lower cost debt to get their yield up to 11.
Yeah. Suffice it to say, we're all looking for more efficient capital structures.
Sure.
Two different markets. We have the land development community over here and the home building community. Home builders just want to do that more and more, just be focus on manufacturing homes on
Right.
lots provided by others.
Well, that's right, but that's a big part of the return question too. Are
Mhm.
you
Yep.
who's going to develop the lots and who's at risk for the cost overruns?
Yep.
Sometimes the builder is, sometimes they're not. All of that. That's why these yields, there's not one yield.
Yeah. And it's also really interesting in California, and we're talking about that other than a couple of large players in Orange County and some other places. But I have not seen the large master plan developers that I would typically see playing in Texas. And so obviously in Texas we have a lot of large companies delivering large lots, same thing as in Florida. Uh, California, they tend to be more investors wanting to sell blue top lots or to builders. I mean, what are you seeing around the country? And here again, I'm just focused on projects where we're issuing bonds. You see way more than we do.
Yes. uh, we have a lot of really smart consultants based in California,
Uh-huh.
and two of them did more than 200,000 miles on an airplane last year. So there's just not that much going
Yeah,
on. I mean, local jurisdictions, not the state to some extent,
yeah,
um, but make it really, really, really difficult. And we just
yeah,
had those horrendous fires here. Every time something goes wrong, more regulation comes in and
yeah,
it makes it more difficult. And it's all with good intent, right? We don't want something like that to happen again.
right.
But California is the poster child for making developer life miserable. So you
Yeah.
just don't see a lot of it.
Well, let's jump back to the master plan communities because
Okay.
John Burns puts out a top 50 selling master plan communities. As I remember, the majority are in Texas and in Florida,
Yep.
with a spattering around the Southwest. What are the three factors driving MPC sales?
Um, well, NPCs. first of all, it's a really large piece of land.
Mhm.
So somebody has got the budget to really plan it right and to think thoughtfully. And you don't see home builders doing this. It's
Yeah.
not a 3-year play. It's usually a 20-year play.
Hmm.
So the consumer sees this and the builders see this, like they're going to spend the money and they're going to do it right. They're going to put the right amenities in. They use our team a lot
Yep.
for segmentation analysis. I remember we were very much in front on this built to rent thing, and every single master plan community was like, rentals, you got to be kidding me. And I was like, no, you don't understand. These are people who are going to become home buyers later, and
Yeah.
they're just like that. And we got one community in Florida, I think it's got 7 built to rent under construction right now. So
Yeah.
that's the type of segmentation work. And then the consumer sees this and goes, all right, first of all, my value is probably going to hold up better because this is a
Yeah.
great community. They're probably building a brand new school in this community. So the schools are going to be really good because new schools attract great
Yep.
principals, which attract great teachers. And they historically get a nice absorption advantage and a price premium because they
Yeah.
deserve it. And they spend the money up front too. So I'm not sure the returns are higher. They're probably the same.
Yeah, and to your point, I was interviewing Randall Lewis for those of our listeners that aren't familiar with Randall, the Lewis Group of companies. But to your point specifically, Randall said all MPC developers should consider a build to rent at some part of their community because it is in fact a feeder of future buyers to the community because their kids are going to school at the local schools. You know, they like the amenitized lifestyle, and it's just a natural for them to move from build to rent into an entry level or some other type of housing option.
Yeah. And I think that is even stronger in Texas
Yeah.
because what build to rent tends to be more appealing to people that are interested in a single family home.
Hmm.
They may be selling a single family home and moving to Texas. And so they're not going to rent in an apartment, they're going to
Yeah.
rent a house. So, and they're just test driving it for a year or two to make sure the job is secure and I like
Yeah.
it here. So these are real future
Yeah.
homeowners.
We get a lot of call from the BTR guys and they want to know about the district tax and how it's going to impact their NOI. So I'm the bearer of bad news in that regard. But you know, my conversations with them is if you want to enjoy the amenitized lifestyle, you know, that's the freight you have to pay to be able to locate in that MPC.
Well, and I bet anything their absorption's higher too, and the
Yeah.
rents are higher too, because this person coming from another state can look and say, wait a minute, I want to live here.
Yeah, exactly.
And maybe become a homeowner next year.
And you know, to that, to your point, and you're talking about segmentation and consumer preferences, and we're talking about amenities at MPCs. As part of your research, what are you seeing that buyers are looking for that may have surprised you, yeah, in your research that you're doing as it relates to changing consumer preferences? And I know that's a you can take that a lot of different ways, but is there anything that just stands out to you as being, wow, that's really interesting. I would have never thought about that.
Um, I don't think there's anything that out of left field.
Okay.
Although I still have a lot of doubters when I say what is going on. So you brought about affordability
Yep.
earlier. People don't need a big bedroom because you don't even need kids don't even use desks anymore.
Yeah.
You people are not using their dining room and their living room, and so they're willing to give that up.
Yeah.
So we're seeing some design trends that really the architects and really the builders who are passionate about their architecture just were very unwilling to make. And then density people are willing
Yep.
to live in high density detached communities and paired townhomes. Uh, that's a very reasonable trade-off for all the reasons I said to live where you want to live.
Yeah. And you brought up design and where I live in Phoenix, a lot of this area was built after the war. The homes, 1,000 square feet,
Yeah,
most of them, on a
right.
6,000 foot lot. They're a rectangle. yeah,
Right.
and 3 bedrooms, 2 bath, 3 bedrooms, 1 bath. Uh, to your point, where we're living differently, will the American consumer accept a home on that is on average less than what 2,200 square feet to get
Well,
into
we're definitely trending that way. Home
yeah,
sizes have been trending down, so if you're getting older, there's only two of you in the
yeah,
house, you need
yeah,
2,200 square feet. If you're not having children, which people are not, or you're only having one child, you don't need
right,
2,200 square feet. That's one of the other pain points for my building products clients,
yeah.
is that there's less materials going into the house to help, and it helps with affordability.
Right, right. And so to your point, you said, we don't need as large of bedrooms anymore because we don't need desks because they're working on a laptop on their
Right.
bed. And are there any other design changes that you're seeing where, you know what, we don't need the formal dining room. That's completely gone. We're going to go to a big open concept, which has good and at least in my opinion, good things and bad things about it. But in any more cutting edge design elements that you're telling your builders, you may want to consider that. And they're saying, I don't know, John, that may be a bridge too far today.
Uh, Almost 10 years ago, we bought Howard Englander's design company called Design Lens, and
Uh-huh.
it's now part of our New Home Trends Institute, where we have people full-time monitoring those trends. So we
Okay.
actually post a fair amount of them for free on our Instagram account and LinkedIn.
Okay.
So I kind of only know that stuff. It's not my area of
Yeah. Yeah.
expertise, but anything I mean, if people are interested in design trends, that's what we're doing.
Okay, and could you just remind our listeners where to find that again? And I encourage all of our listeners who are interested in design to follow John's.
Yeah. Well, our website is jbrec.com for John Burns Research and Consulting,
Mhm.
and newhometrendsinstitute.com has that information in it, but you can get to it through our website too.
Yeah,
But it's really taken off. We started some councils, like some ULI councils, where people can
yeah.
get together and man, we're adding 3 more councils this year because we were sold out last year.
Wow, that's great. And if you haven't been to John Burns's website, please go there. It has so much information. And as part of the podcast, John, I'll make sure that we're putting all the links
Well,
uh,
thank you.
to your websites for you.
Thank you. That's what we're passionate about, is figuring out what's going on today so it help you build a better tomorrow.
Exactly. And as we're getting close to wrapping up our podcast, John, is there anything that's keeping you up at night as it relates to our industry, be it land development, home building, that you're just concerned about?
Well, I'm always concerned about what I don't know.
Hmm.
And so, if anybody's listening to me and saying, man, he's completely missing the boat or something he needs to know, please tell me. When I give presentations, I usually start with that. Like, I'm not going to learn a thing talking to you guys. Hit me with the Q&A and the
Yeah,
disagreement afterwards. So that's what keeps me up at night. AI is both a threat to our business and an opportunity for our business. So
yeah,
I'm losing a lot of sleep related to that. I don't think that's going to impact home building too much. I do think that's going to allow the big builders maybe to get more efficient with their own data and do quicker analysis,
yeah,
unless some tools come along that really help the small builders be more nimble.
yeah. And I thought of another question for you, John. Just curious, and we keep on talking about in the home building industry that our methods of manufacturing homes hasn't changed over the last 100 years. There's always, a new way to, we're either going to build them in factories and ship them, or we're going to do 3D printing or some combination thereof. Do you see the way we build homes changing anytime in the near future?
Uh,
On scale, I
I
should say.
mean, not. I mean, there's more getting assembled on site, being built in a factory and assembled on site.
Hmm.
If anybody's going to figure it out, it's Berkshire Hathaway subsidiary Clayton, which
Hmm.
builds 50,000 manufactured homes a year, and all the Japanese companies we talked about who build that way in Japan, because things are different in Japan.
Yeah.
That Kasui has a new brand. It's a high-end brand called Shawwood, where they're doing a lot of it built that way. Uh, But I don't think it's going to be an overnight change, because at the end of the day, and people may not agree with this, homes aren't that expensive to build.
Mhm.
Like people use the analogy of building a car in your driveway. Okay, if I built a car in my driveway, it would cost $1 million to build that car. I mean, it's just, so we haven't been able to get the costs down to have it be tremendously efficient. And so, unless the costs of construction really skyrocket from here, I don't think there's going to be a significant change anytime soon.
Great. John, thanks. In conclusion, are there any questions I should have asked you but didn't that you would like to share with our listeners?
Well, going back to what you don't know, we didn't talk about the resale market.
Yeah.
The resale market is fascinating. So you've got all these homeowners who basically are financially incented not to move with their 3% mortgage. But then in Florida and in Texas, and especially Florida, you had all these investors buying homes during the downturn. And I'm not talking about the big guys.
Yeah.
They're REITs and they're big businesses. I'm talking about the mom and pops. We're seeing a lot of listings come on the market and a lot of competition there, that the new home industry is really benefiting from the locked-in people in their current homes. There's no resale supply, but this is those heavy investor areas are seeing some resale supply hits, and they're great markets, but we're seeing prices fall in certain markets.
Yeah.
Those ones.
And is that as a result in keeping with the 85% of new home resales being 85% of the new home sales price? Is that impacting new home sales?
Well, that's a national number. The percentage, I mean, I am, it's less than that in Dallas because we have so many homes. But there's more competition in the resale market. The new home industry has really benefited from, if you need to move in the next 90 days, those quick move-in homes are the best value out there.
Yep, absolutely. And you can tell I've been out of the market research business for over 40 years. I know enough to be dangerous. Is there anything that you'd like to add, or
Well, my job has been to attract great people to our company. So we've got experienced, knowledgeable consulting leaders all over the country. So we've got Brian and Chad and Jessica and a bunch of others in Texas, and Leslie and Oliver and Zach in Florida. Huge team in San Diego led by Ken and Don Dean up in Northern California. So we have a little tool on our website where you can find your local leader and give them a call.
John, I really appreciate you taking the time to speak with me and our listeners here today. And to our listeners, I will be posting on our show notes contact information for John, his company, some of the publications and other websites that we mentioned here today. And if you enjoyed today's podcast, I encourage you to share it with your team, and feel free to subscribe wherever you get your podcasts. So thank you.
You have been listening to the Land to Lots podcast with Carter Froelich. Follow us wherever you find your podcast to never miss a new episode.